Hiya guys, today I'm going to talk you through some live trades that I took on the US markets, and they're all with one company. They're all trades that I took on Tesla, and it's a highly volatile stock at the moment. It's moving very quickly with great volume, and that's what you're looking for when you're trading US stocks. When you're trading equities, when you're trading indices, you need to see movement in the market. It needs to be going up and down. And so one of the things that we're looking for is volatility within the market that we're trading. Now, I trade each market in the same way. I use candlestick charts for my analysis, and I look for, as you'll know by now, 3 C's: context, content, and confluence. And I get that from the candlestick charts. I use a master time frame, which is 5 times larger than my trading time frame. And so I always take trades in the same way. And if you learn to do this and you learn the principles behind trading, behind day trading that I'm going to talk about in the video today, if you learn these skills, then you could trade for a living. You could trade for a living, and these trades just show you the potential that's out there. They show you the discipline that I have with my own trading, following a system that I have been working for years now. I know it works. I have confidence in it because I've been operating it for quite a long time. And I want to teach you what I've learned myself, what I do, so that you can do the same. Because basically, you know, if somebody's got a skill that you want yourself, then you can have it. You just need to apply the skills. You need to learn the skills. You need to apply the skills, don't you? Simple as that. Except trading isn't particularly simple. There are lots of bits that need to fit together in trading. And you'll see in the videos that, you know, there's a lot of analysis that's going on as the trades are taking place. But effectively, the target that I have for the trade and the risk that I take with my own money is set once the trade has started. And I'm only going to get out of the trade early, before it hits the target or before it hits my stop loss, if certain criteria are fulfilled. And other than that, I'm staying in the trade. So I don't have to worry too much about what's happening during the trade, because I've already got defined criteria for what I'm going to do. And that will help you with the emotional side of trading. The emotions, once you're trading and, you know, your risk is set, then, you know, the emotions will take over, try to take over, and they'll try to tell you to exit early. And they'll try to tell you to hold on to losing trades in the hope that it'll come back to break even or to be a winner. And the thing is that that's not how to trade. You've got to you've got to start a trade based on defined criteria. And I look for content, context, and confluence. So what I'm looking for in terms of context is I'm looking for good value areas to take trades. Okay, so if a stock is going up like this, or like this, it's going up, then if the stock is going up like this, then I'm going to be looking to take the trades in the direction of the movement of the market, which would be up. And I'm going to be looking to take the trades not up here, but when it pulls back a bit, I'm going to be looking to take the trades in this bit here, hopefully here, so that it goes straight up. The trades that I take are day trades. They're not long trades. They can last anything between a couple of minutes or a couple of seconds, as you'll see in one of the trades in the video. And they can last for longer than that. They can last for a couple of hours sometimes. But basically, when I take the trade, I've made a decision to place the trade based on a risk margin. So if it's going up like this, I shall have a defined risk. So I shall enter here and have a defined risk down here, let's say. And if it goes down to that level and hits it, then that'll be the trade gone. Okay, and I shall have a target level which is based on where the market looks likely to go to in the direction of the trade, and that is always at least as large as the risk that I take, so that I know that over a series of trades, that even if I only get the probability, even if I only get the decision right 50% of the time, then I'm still going to be profitable if my target and profit is greater than my risk or losses. Okay, my success rate is significantly better than that, and the type of trades that I take, I expect personally at least an 80% success rate, because this is based on my past history. You know, the trades that I've taken in the past, how they've performed. I know that as long as I do everything right within the trade and within my analysis prior to the trade, that there's a very good chance that these trades are going to be successful. And that's just through learning how to trade, which is, you know, I pass on this knowledge to other people. It's what I do. I coach and I train other traders so that they can learn successful ways to operate in the market, trade for a living, and make a success out of their trading. So I'm going to talk you through what I look for in terms of analysis. Is the market going up or down? If the market is going up, then I'm going to be taking and looking for good value opportunities to take long trades. If the market is going down, then I'm going to be looking for good value opportunities to take short trades. Okay, if the market's going down, and then I'm not going to be taking a trade here. I'm going to wait until it pulls back a bit and looks like it's good value, and I'm going to go short here, hoping that the market goes down. And I look for content within the candlesticks to tell me the likelihood or the probability, based on my experience and my analysis of the markets, the probability that the trade's going to be successful. When the probability, in my view, is over 50%, then it's worth taking the trade, as long as I can define my risk. As long as I can define my risk, then I'll take the trade. Okay. Now, I'm spread betting in these trades, and there is a charge for trading. There's a charge for trading which needs to be part of the mathematical equation. So you've got risk, you've got reward, and you've got the charge to take into consideration as well. And the market needs to be moving sufficiently in both directions or in one direction. It needs to be sufficiently volatile to take into account the charges that are being made on the trades. And I'll show you what they are on these particular trades. Quite high on these particular trades, but the volatility was sufficient to take account of the charge that was made by the broker for taking the trades. That's your opportunity cost, isn't it? And you have to think about this like a business. You have to think about your trading as a business. Businesses do what's successful. They find out what's successful and they do that, and they repeat and they iterate. They get better as they gain experience, and as the people within the business gain experience, learn and develop their skills. They get better at it. They iterate, they look for small improvements, and that's what I do with my trading. That's what I coach other traders to do as well. So I'm going to go through the analysis of each trade. I'm going to go through the trade as live. So as it takes place, I'll be giving you a commentary on the trade, telling you where my risk, my reward, where I'm looking to take profits, and the analysis of the candlesticks through the trades as well. Okay, so any comments that you've got, please leave them below. Give me a thumbs up if you like the video, you like the content, and please do go ahead and subscribe to the channel. I very much appreciate your company. So let's go and have a look at these trades now. Thank you. I'll just talk you through the chart before I start playing the video of the live trade. We've entered into the trade and I've gone short. Okay, so you can see the current position is here. It's up £270 and this is at £5 per point. Okay, this stock has showed unbelievable volatility over the last few weeks, and between each of these numbers there are 500 points. This is 90,500, this is 90,000, so 500 points. Some of these bars, that one is about 400 points long, okay? And so I'm scalping, I guess. You call it scalping, it's trading. But it's quick trades, and on this particular occasion I've gone short and I'm hoping for a big quick move down, and it could be one candlestick, one minute candlestick, or it could take a bit longer than that. And the reason that I've gone short is because the market is in a downtrend. Okay, it's making this is a very short term, but on this time frame the market is making lower highs and it's making lower lows, and so I expect it to make a lower low, or at least get to this low here. And so I'm using, for indicator purposes, I'm using EMAs on here to give me context and to show me where the content needs to be right in order to take the market to where it needs to go for my trades. Okay, so the market's in a short-term downtrend, and that's why I've gone short. On the longer time frame, this was the open. The market shot down. Crazy volatility to start off with. That one, that candlestick there is about 700 points long. Absolutely mad trading, and so I won't trade during the first 10 minutes of opening when it's like that. Let it calm down, settle into a pattern, and you can see then the market started moving up in a zigzag fashion as it does. The candlesticks got smaller as the market got towards the top, and then it started going down, and big candlesticks taking it down, and I'm hoping for a lower low. Okay, so let's play the video. So we've got the 8, the 20, the 90 EMAs on this particular chart, which are these wavy lines here. And the market has come up to the 20 exponential moving average and it's bounced down. I entered, well, here, but I didn't get in until here. The broker has charged me a spread fee, as they do, and so I entered here, and the spread fee is about 70 points at this point in time. Okay, so this is where my break-even level is, and at the moment we're in profit, or we were in profit. There you go, it's break-even now. Okay, so this is break even and my risk is up here, right? If the market's in a downtrend, which was the principle behind my trade, then if it comes up, it should make a lower high, because the markets that go down, that are going down, are making lower highs and they're making lower lows, and so it should make a lower low as well. Okay, so this is where my protective stop is. It's an imaginary stop, and so, you know, it's in my head. It's not an order that's in the charts, but I'll wait until it gets to here, and then I'll be like lightning getting in and exiting this trade if it gets up to this level here. Okay, in order to make this trade work, let's say I took this 100 times, to make it work effectively, I need to get a reward that's as big as my risk. So I've got to be looking at the market getting down to the bottom of this candlestick here at least, and hopefully
can get one of these big candlesticks up and it can take me to profit. Now this is about the right level for profit. Nice big red candlestick came in there, and it has to show me a willingness to go down at this stage, otherwise I'm going to exit. And there's the willingness to go down. And there's the willingness to go back up. Okay. Right. So you can see that we've had a low here, and there's support at this level potentially here. And these are all at the same levels. There's a support level here. And as long as I can get my one-to-one reward to risk, then that's good enough for me, and I'll get out at this stage, I think. Let's see if I can get a bit more. Starting to think about exiting. Now, there we go. So took my profits there because I think I can see the market going back up from here. Might not go a long way up, but I can see it rejecting off this level here, and the support is actually working. You can see by the candlesticks with the pins on the bottom that the market's starting to go back up slightly. Okay, so you can see what happened here. This was where I exited my trade right at the bottom, and then the market started peeling up, and I've just gone long. I've just gone long. Now the market is still in a downward leg, but these candlesticks are huge, and this is a good value area, if you like it, for longs. The market's put in an engulfing candlestick, which is one of my reversal signals, beginning of a reversal there. There's another engulfing candlestick there. I'm looking for two, and a double doji, which is a pause in the action. The market's gone above the pause and then pushed up once more. And I think at this stage that the market can actually make this level here, which is the moving average, 400, which is a long-term moving average, and I think it can get up to that level, which matches this high here. So that's the trade, and at the moment it's in a losing position. It's in a losing position because of the spread. The broker charge is about 70-80 points at this stage. So without the spread, I'll be about now where market will be about where I entered the trade, but it's in a losing position as it stands at the moment from a monetary point of view. Now, okay, so you've got to deal with whatever happens mentally during a trade. You've got to deal with it during the trade. But the thing is, you've got to have your plan in place, and you can't deviate from the plan. And so I've got a plan, which is take profits when the market gets up here, being positive, exit for a loss if the market goes below here. Okay, so this being the last semi-low, if you like. So I'm looking at getting one-to-one for my trade, so one-to-one reward to risk, no more than that. This is a it's not a with trend trade. There is no trend at this point in time. This is trading range activity, and we're in an upward leg. You can see the market's gone up, down, and it's going up. Okay, so when it's going up, down, up, and it's actually rising, the average is going up, the market's above the exponential moving averages of 8, the exponential moving average, and the 20 exponential moving average. It's above those levels, and it's pushing up, and I think we can get a little bit extra, but I wouldn't be confident that it'll go past this level here, because this is a longer term exponential moving average, and it's at this high here, which will offer resistance to higher prices. So really, really frequently you'll see a move up to this level and then it'll come back down again, and that's what I'm betting on happening. So I'm going to take my profit if that green bar that's developing here reaches this level. I'll be taking my profit, and if it goes down from here and comes down here, I'll be out for a loss. Okay, so we're in profit now, and the market is moving up there. Okay, let's see if we can get a bit more. And it's not liking this level. These longer term moving averages, you can very often see a big reaction, and here we go. So you can see what happened. I exited my trade here, and the market then reacted to this moving average and started coming back down, and I'm now short. I'm now short again. Okay, up, down, up, down, up. Big reaction to value for people looking to go short. And I was just getting over my last trade, and so I was a bit delayed on my entry, but we've entered short now. So down, up, and just entered, and I'm entering just below the 8 exponential moving average, which I see as being value for people looking to sell the market. You can see these bars, they'll move away from the averages, go back, move away, go back, and this is what my plan anytime it gets near these moving averages is a potential for trade, because these moves are so big in such a short period of time. And so I've taken a trade short, and because of the spread, it's actually I've entered near the moving average, but it's come. My entry looks as though it's below the moving, significantly below the moving average. It's not. It's only a little bit below it, and I need a break of this level now. 1, 2, 3 candlestick bars on the trot with similar lows here, and I want to see a lower low come in the next few candlesticks, really. So, what happens if the market starts moving up now? What do I do? Well, the thing is that I've already made my mind up. My mind's made up. I'm short, and I've already predetermined that, my risk needs to be up here, my target down here, and that gives me a 1-to-1 just over, hopefully, risk. My actual risk is based on where the worst position that I've been in whilst the trade has been on, which is, it came up here and I was in a losing position. That's my actual risk so far, because at any stage I could exit. And we're now entering into profit with no guarantee that it'll remain in profit, and it'll do what it does. But I'm hoping for a quick move down from here, hoping for one of these bigger bars with the market now to start coming down below those levels for me to start thinking about taking profits down here at this 90,000 level somewhere, or nearly at that level, to get my 1-to-1. So if the market, let's say the market starts moving upwards at this stage, let's say it starts moving upwards, what am I going to do? Well, I'm going to wait until it gets to my stop level. I'm going to wait for that, because I've determined that the market's more likely to go down than it is up, and it will go down, hopefully, to a level that enables me to get a good reward for my risk on the trade, and that's a good sign there. The market's now made a lower low, candlestick low, and seems to be moving down. We're getting to the danger area. This is where my last trade exited, where I exited my last trade and for a profit. So I'd like to see this come below these levels here. I'd like to see that happening. Otherwise, you know, is it going to come down? Well, you know, it's on the longer term, high, lower high, lower high, lower high. It's all looking good. Lower low than this one, and lower low than that one. This is now a lower low. This is now a lower low, which is great news because it means that there is the support level here was broken, and there'll be orders to sell below that level there as people exit their long positions. So it's all looking good up until this stage here. We're in profit for the trade, you know, that's good money, and I need more. I need more. I need more. Not just because I need to eat and live and stuff. I need more because I have to get a reward for my trades that matches at least my risk that I'm taking on each trade. Otherwise, in the long run, I won't be a profitable trader. And the reason I am a profitable trader is because I make the right decisions before I trade, before I take the trades, and I make the right decisions in trades and to see out the trade for what I'd originally intended, which was hopefully exiting around here. And you know, this is the last high, and the market would have to go through 1, 2, 3, 4 with this last high, 4 levels of resistance to get to my exit. So my risk will be here, and hopefully it's going to go nowhere near that, and hopefully in the next minute or so we'll get a push down. Obviously going up at the moment, so it's hit the up to the 8 exponential moving average and a quick rejection down. I don't know whether you saw that, but quick rejection down means there's people, big money, selling at the exponential moving averages. Okay, not big enough to resist that little momentum surge, but still big. Now there's the 20 exponential moving average, and this is where you'd expect to see some level of resistance coming in. If the market's going to go down, then I'd like to see the market reject off these levels here. I'd really like to see that, and for it to start going down soon. Now, as I said before, I'm not going to be looking to exit at this stage for a loss. You know, the loss is what, £400, £500 if it shoots up now, but I'm not going to be looking to exit at this stage here because, you know, the market is in a longer term downtrend, and I have to give it time to move to where I need it to move to for my profit. I have to give it time, I have to give it space. You can't, when you're in trades, you can't just expect to get every bar to be the colour you want it to be. You can't expect that. You know, prices fluctuate as new buyers and new sellers come in, and the market needs to go to a value level, a level of value, in order to attract movement and volatility. And this market is hugely volatile at the moment, and it's moving up and it's moving down. It's in a trading range, and it's in a downward leg of a trading range at the moment, and I'm short, and I'm hoping that the market is going to continue down from here. Okay, so big green candlestick here, followed by a reversal candlestick, which was not, it wasn't tiny, but it showed that the sellers didn't like the market going up to the top here. It rejected down off the 20 exponential moving average and then continued down on the next bar. Now, could see a number of minutes of the market fluctuating here. If the market goes above this high here, I'm going to stay in the trade. When the market's moving up, and you don't want to be in a long trade, it's very often when the market's moving up and you don't want to be in a short trade. It's when the market's doing this up, down, up, down, up, down, and making higher highs. Then you don't want to be going short, because it's clearly going up, and every time it goes down, it goes up to a new high, and that's trouble. So coming down, it was going down in waves, it was making lower lows as it was going down, up, down, up, down. And so what I don't want to see now is, I don't want to see up, down, up, down, up. That'll be me out at that stage. It's gone up, down, up. It's making a new high now, and it could break out higher. So I'm going to get my numbers ready to exit if it shoots up. But at this stage, it's still way short of where I'd planned my exit if I was wrong. Right, okay, so what I'm looking at now is one engulfing long green bar, one and a second engulfing green bar, and now it's pulling back. Now, it's pulling back down, and I don't want to see it go back up again. Alright, up, down, and if it goes back up and makes a new high, if this is a red bar, small red bar, if it goes up and makes a new high, then I won't want to be in the trade, because people get convinced that the market's going to go in one direction or another, and the more times it makes highs after going down, the more times it makes new highs, then the more people are going to be convinced it's going up. Therefore, the more people. I'm getting ready to exit. Getting ready to exit at this stage if this bar now shoots up. Okay, great. That's good news. It's going to go down. Pretty sure of it now. Pretty sure of it at this stage. We got a good rejection. That was a nice move. Now, I'd just like to see the market make a slightly lower low than this low here now. I'd like to see it come down and make a candlestick low below this level here. At this stage, it looks like there's a level of support for the market here. So I'd like to see it come down and make a new candlestick low. And that would be a great sign. If it goes up now, past this level here, then that's going to be a losing trade for me. But it's still got to bypass the 8 and the 20 moving average and create a new high. So there are 3 levels of support for it to go through from here before I'm accepting a loss. But I will accept a loss if I need to, and I won't wait for it to get to my original risk level. Okay, so I now got a definitive risk on this trade, which is here, and so I know that at this point in time now, I know what my risk is, I know what I can lose, and I'm hoping that market comes down here and therefore gives me it's going up again at the moment, but hopefully gives me at least 1-to-1 and probably closer to 2-to-1 for my actual risk. Maybe even 3-to-1 for my actual risk on this trade. Okay. Right, so the way markets move, big bars followed by smaller bars, and we've got 2 smaller bars now. 1, 2. They're doji, almost doji candlesticks. The tails are on the bottom mainly, which is not great, but they're 2 very small, so it should be followed by a big move. Now, I don't want it to be a big move up, obviously. I want it to be a big move down, and that's a good sign, the fact that it's broken a new, or made a new candlestick low there. Fresh low, hopefully get another burst here, yep. and once it gets past that and that low, that candlestick low, then we're heading in the right direction. So the market's now bounced off the 20 exponential moving average. Big sellers come in. That was a fairly big red bar, and so it's closed on its low, and we should see follow-on selling. Okay. Excellent. Excellent. Come on, just a little bit more. It's just short of where I want it to be. It's just short. Okay, this level here was support, but it's now resistance, and that's it. Okay, so that was a really good trade, and the market's starting to really plummet down, but I'm sticking to my principles and I've taken my profit, and that's that. So moving on, the market really did come down. As you can see, the market really came down. That is, that's enough to buy a house. All of that, but that's not what we're trading. That isn't what we're trading. We're doing short-term trading, and I've now gone long because the market's gone up, made a higher low, and that's a high, and I'm getting ready to take my profits already on this trade, and we're gone. Okay, absolutely fantastic. Now, what we got here was we got a double doji, 2 pin bars and very small bodies associated with them. This, for me, is a reversal pattern. The market's gone up and it's come back down. It's given me a reversal pattern off the exponential moving averages, and when that bar there makes a new high, again the market rises above this candlestick pattern here, then I went long and took the market up. And if I just rewind that slightly, you can see that the risk, what was the risk, 400-500, something like that, and the reward is for you to see. Okay, there is a good reward there for the risk that I took, possibly more than 4 or 5, it's probably 500, something like that, but there's a good, solid 4 times risk for my reward on that particular trade. That's what trading double dojis can do. And I wrote a book on trading Forex, those particular patterns on the 5-minute chart, and you can get it by visiting excellenceassured.com. Visit the website. You can get the ebook version of the book for free, and I almost always get 2 times my risk and sometimes more on those particular trades. And on this particular occasion it was significantly more, and the market just about reached the longer term exponential moving average, the 90 here, and I exited, and that's me done. That's me done. I hope you enjoyed this video. Really hope that you got some good value out of it. You understand the principles behind how I'm trading, and I'd be delighted for you to join me on my next video, or join me at Excellence Assured at the Academy and learn to trade for a living. My name's Anthony Beardsall. Thanks ever so much for joining me. I'll see you on the next one. Bye for now.